is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Yesterday's gone. Tomorrow's not here. What are you doing right now? Right now, folks, that market has some red paint in a big way. Let's take a look at it. Dow Industrial's down 630. You get the Nasdaq down 137. S&Ps are down 60. Percentage-wise, what you have is this. You get the Dow down 2.4%. S&Ps off 1.8. Nasdaq down 1.8. Gold contract down $16.80, trading at $13.31. You got silver down 61 cents, $16.53. Copper down 3 pennies at $3.17 a pound. Light sweet crude off 38 cents, $65.43 a barrel. Notes, 10-year note down 13 ticks, 120.25. 30-year bond down a full point, plus 19 ticks, 144.31. King dollar's up 535 ticks at 89.040. The euro's at 124.5 to the U.S. dollar. The yen is trading at 110.25 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. So let's go over the world of the tick first. So what we have out here is that you get a minus tick, folks, of 1530. Now, the way these bottoms normally come in is that you're going to have to actually get a couple of these. But what that is saying is that you had selling. Well, we know we had selling, that's for sure. This market has been down all day long and just kind of accelerated as time has came on later throughout the day. We'll see if it gets any type of bounce or they just flush this thing down the toilet as we come into the close. We get over to the gold contract. You take a look at the gold contract. What we have with the gold contract is that you got into the strength from January 12th. We have done 404,000 contracts. So bottom line is that that's a lot of contract volume. But that being said, we were coming into 500 and 550,000. So bottom line is that that is not a broken market. You're coming into where the strength is, where it came from. If we go to the GDX and we take a look at the equity side of that, what you have inside the equity side of this is that you're coming down with 41 million shares. Now, this is a little problem child because what we're going to have is this, is that when we come into this close, this will have volume. Inside the GDX, what happens is that at the close, you get a huge amount of volume. So what we're doing is that we'll see how much we get on the weekly basis. This is where we stand so far. On the weekly basis, we've done 218 million. Now, that's not that bad because we're actually coming into 404. But I expect what you're going to see is that coming into the close right now, you have 41 million shares. What I expect we're going to see out here by the close will be about 60 million. You're not at the swing point. The swing low is 21.27. But bottom line is that there's selling out here, and there's selling across all the indices. If we go take a look at the SPY, folks, what you have with the SPY, this is the largest move since September of, largest move down, that is, since September of 2016. We take a look at this now. What this is going to have, and this is what's really going to be intriguing about this whole deal, this is going to be volume off the top. The SPY, we had hit a high last week, 516 million shares. We're coming off that high, and we're coming off that high with 535 thus far on a weekly. We've done 104 million shares. The SPY will also have big numbers coming into the close. If we go over and look inside the NDX 100, the NDX 100 right now, strength versus the weakness will give you an idea of where we stand out here. The strength inside the NDX 100 is Chatham Communications is up 3.8%, Liberty's up 3.3%. On the way down, two of the largest laggards happen to be Google. You got to remember, inside the NDX 100 now, you have Google twice. You have Google, they're both down about $63. You get Lam Research, that's trading off 5.3% or down $10. You got Seagate Technology down 248 or 4.5%. When you take a look at some of these equities, the leaders on the way down are Google. Google's down 63 and 53. Priceline's down 35. You get O'Reilly Automotive down 14. Mondelez is down 13. Big numbers. That's the bottom line. Apple, Amazon's still holding price. Amazon is up $43. Inside the Dow Industrials, strength versus the weakness. This is the number, man. This is quite a kind of number, too. So inside the Dow Industrials, what we have is that there's not one Dow stock in the positive. The largest culprit taking it away in the way down is Goldman Sachs. Goldman is putting 74 negative points in. Chevron's putting 47. Boeing's putting 44. Apple's putting 44. Apple's down 650. That's trading at 161.27. You get ExxonMobil. Exxon took a monster hit. I'm gonna get into the oils as soon as we come back from the first break. And what you have with the oils, this is like a classic. The oils did a huge counter trend bounce, came up to where they fell apart a couple years ago and fell apart once again. They have wide price spread. They have huge volume. Those babies are going south. We'll see whether the actual physical oil is going south. Caterpillar is putting 36 negative points into it. That's down to 5.5%. Visa's down 4.7. If we get over and we take a look at Apple. So what do we have with Apple out here? Apple come out with its numbers last night. Bottom line, numbers weren't bad. They've been selling Apple away in a huge way. If you remember last week, we were talking about that the filing was Goldman Sachs. They were one of the culprits selling it off the high. Well, now Apple's, bottom line, it's an ABC structure down. We were speculating on that yesterday. It's breaking the B point, monster volume. You get a price projection down here at the gap of 157. So big numbers. You can have ABC structures down, by the way, all over the place. Stay right there, folks. Come right back. We have the Dow down. NASDAQ is down 124. S&Ps are off 55. We'll come.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Dow Industrials right now are trading down 540. Nasdaq is off 49. S&Ps are down. Nasdaq is off 95. Nasdaq is down 110. The comp. The NDX 100 is down 94, and you get the S&Ps off 50. If we go over to that oil sector, we take a look at ExxonMobil. What you're going to see out here, this is pretty wild how this thing is actually shaken out. If you want to see technically how you run into monster downdraft, just can't handle it. In ExxonMobil's case, folks, it wasn't just one downdraft we were running into. This consolidation's been out here for quite a while. And so when we look at it, what you have is this, is that when we came off the highs in July of 2016, this was fast and furious on the way down. On the week of the 29th of July, we went from 93 to 86, big number. You're talking about a monster stock. Had volume behind the move. You did another counter trend bounce. You got up into the price point of the 93 again, but couldn't handle it. Couldn't handle that downdraft. You came off that, pretty good volume. That's what we have just done. If we bring this back till August of 2017, it starts moving higher, has decent juice behind it. You know, you did a small ABC structure on the way up. You finished that, and when we finished it, however, you had the bar going against your monster downdraft. You did 52 million shares last week, going against 69 million. Just blows it out of the water. What you have now is that you're blowing it out of the water, monster volume. What we've done just now is that we're coming down on a weekly basis with 75 million shares. What that's setting up, guess what? It's setting up the bottom once again, which is at 76. So that's going to be a big number. If we go to Chevron and we take a look at Chevron, how Chevron's set up, same type of setup, except Chevron has always been much stronger than ExxonMobil. It got up and really didn't have the type of resistance that Exxon did. The resistance on Chevron goes all the way back to 2014. So 2014, bottom line, you had a high out there of 135. We got to 133. Imagine that, 2 points away from the high and just couldn't handle it. Now what does it do? It comes off the high with volume, and that is a problem. That's the bottom line. When you come off highs with volume, it is a monster problem, period. Why? Because most times when you come off a high with high volume, what that sets up is a much larger correction than you normally would have. And of course, what we have here is that we haven't had a correction in so long that your probability is pretty good that we're going to basically have a correction. I heard on Mr. Dave White talking about if, in fact, we get some kind of a bounce and it's on light volume, then you're setting up some very large ABC structures on the way down. You know, so what we do have is this, is that if we look at the Qs are down on volume. It's going to be real easy to get a bounce on light volume. The reason being is that this type of move takes a lot of energy out of the marketplace very quickly. That on top of the aspect that we have window breaking. It's actually window dressing, folks. Bottom line is they're breaking them today. But the window dressing does go right into Monday. So there's going to be plenty of people that look at this and say, okay, is this a buy or not? And we get the bounce. Let's picture you get the bounce and it's on light volume. That's when you're going to be setting up some nice large ABC structures on the way down. If we go back to Apple for a second and take a look at Apple, you're going to see that's a clean ABC structure down. You know, the writing was on the wall with Apple. It came off the highs with volume. You'll take a look at this. So your A point on this is the high, 180.10. Your B point is 164. So we're talking basically 16 bucks. You can see when we came down to 46 million. Then what do? You bounce on first day, you bounce on 32. The second day, 47. It goes after the B point today. Monster volume. You just take the top of that. What did I say? Was a 16? It was a 12. 180. Yeah, 16.A to B, which gets you 152. Oh, 150, 16.2, 1. Yeah, 152. Oh, that's interesting. Yeah, this is a 152. Oh, 180, 164. Yeah, 16. 152. So 152 is your number here. Let me see what this. Well, this is going to be interesting. You know what this is going to go after, man? This is going after the low of the 25th of September. Let me pull this back a bit. Oh, and you know what you're going to have here? Oh, baby. Okay, so for all you folks that like candlestick charting, this is going to be really cool to watch, and this is what it is. Right now, we have 2 monster candles on the way down. And if this is going to be free, meaning on a weekly basis, what you have, that is one heck of a signal that 2 different things happen here. If we get this next week, then you can expect a nice counter-trend bounce, a huge counter-trend bounce. And then it's over. Because this is an ominous signal in a huge way. You not only have the candles, you have the volume behind the move. And we'll see whether we get the counter-trend bounce. What tends to happen is that when you get the symbol is 3 black crows. That's what it is. In fact, let me see. Let me see. We probably have this. Now, that would be on a weekly, too, which is pretty intense, man. It's really intense, actually, because it's really hard to get. Let me just see this on. Yeah, no, you can't make the case yet. This is on the daily. On the weekly's worse though. That's the bottom line. You know, you get that on the weekly, and it's huge problems. There's just there's no doubt about that. The GDX. Let's get into this gold market. So Rango Resources. Let's go over to Rango first. I saw one of the Tigers talking about Rango inside the den. So if we take a look at Rango right now is trading down $1.78. That's fine. This is basically good looking, actually. You're pulling back into 500,000. You're pulling back into 540. You have 667, but you haven't hit a swing point either. We put this on a weekly. Let's see how it sets up on a weekly. And it sets up on a weekly. It's going to take more than this to break this down. It's really just a sideways move. Let's go take a look at RGLD, Royal Gold. So Royal Gold right now is trading 87.17, same type of setup. So it's going to get challenging out here. There's no doubt. Bitcoin. What do we got with Bitcoin? Bitcoin, folks. Bottom line keeps going lower. Bitcoin out here right now. We got to a low out here today of 76.14. You're at 86.43 right now. Bottom line, filled the gap. Came down with conviction. Stay right there, folks. We'll come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have Bank of America's down 45 cents. You get Apple off 6. We got GE. GE's down 38. That's trading 15.64. You got, let's see, Marbell's down $1. We have Twitter down $1. Freeport McMoran's down $1.30. Let's go over and take a look at GE and see how GE is setting up here, because GE has been building cars to get the next leg down in this market. And that's okay. So it's breaking again. Here we go. Yep. Okay, so she just broke the 1580 mark. we bring this back a bit. Yeah, this is in no man's land. See, yeah, yep, no doubt. So now we got, let's see, the next level. So 1402 is going to be the next level. My take on this, though, is that we're going to this $5 level. You know, 1135 is the top of it, 572 is the bottom. It looks to me like, you know, it was vicious how much volume GE had last month. And bottom line is, it's starting off the same way. We did 2.35 billion shares going downtown last month. It was just, and you're going into 1.4 billion, you're going into 1.5 billion, and then the low is that 5.9 billion. That's where, so what happens there is that the high of that low very well could save it, which is 1135. You know, we'll see how it shakes out. As we're going to take a look at I want to get into Goldman Sachs. So Goldman Sachs is the leader on the way down inside the Dow Industrials today, point-wise, because you got to remember something. What happens in the Dow Industrials is that is a price-weighted index, and the big numbers can basically, you know, big number stocks take it down and take it up much easier. In Goldman's case, it's 260, and if you remember, when we looked at this last month, the number to keep your eye on for the next couple months is this 250.70 area. The 257, that's what $250.70. That's what we had broken out of. That was the highs of 2007. You broke out of them with dramatically lighter volume. We broke out of them with 53 million shares versus 227. That's a big number. Now, what we've done thus far, we'll see if, in fact, by the end of February, you're going to be underneath that. And if you are underneath that, then that's going to be a major failure. And a major failure inside Goldman would be saying, guess what? Can't bust them up. It's going to bust them down. Interest rate structure out here. This is where we stand with interest rates right now. The 10-year, 2.832. That is one monster move, folks. Bottom line is that that's for 3 months. The last year, when you want to take a look at it, we're almost up 70%. The low for the last year was 2.03. This is the last 12 months. We are at 2.83 on the 10. If we go to the 30, you take a look at that. In fact, I'll put the curve up instead, so we can see. Okay, so the 10-year right now is 2.83. The 30-year is 3.073. So what is happening is it's still the curve is not flattening out. So what happens is that if the curve flattens out, that's when you got to watch out a year and a half, and then monster basically recession. But that's not flattening out. And the way you can tell it's not flattening out, if you happen to be watching Tiger TV, looking at my screen, all you have to do is start. You look at the pluses beside the 10. See, plus 4.4, 30, 4.9. When they stay the same, that means that it's going along the curve, not flattening out. If it flattens out, you'd see the 10, 4.4. You'd see the 30, 3 point something. And then that is basically flattening out. That's the real bottom line. We get a question like, how high do the rates have to go to affect housing? It's a good question. I would say that okay, so the 10, let me look at this for a second. The 10 right now is running 2.8. So you're at about 4.25 on a 30-year. You know, you start catching up with like 5%. I'd say that another 0.75% will make a difference. It will particularly make a difference in big number housing. In smaller number housing, I don't think you're going to see that much of a difference. But as soon as you start talking big numbers, it'll definitely figure every percentage point, you know, is big money. That's the bottom line. And the real question is going to be, do people actually get used to it? That's, you know, there's plenty of folks that have never had high interest rates. And what you had, this is what the last time, if you remember, and I think, you know, plenty of our tigers were around here, when interest rates start going up in the 70s, what happened was that the interest rate was going up, but inflation was going up, and housing was going up dramatically. So that's where you get down to what is the real interest rate, because one of the biggest expansions in housing that I've ever seen, even more so than from 2000 to 2007, was from 1972 to, like, the first one was, going all the way up to 1986. And if you remember, that's when, you know, the rates were 14%. The houses were less expensive, that's for sure. But exponentially, you could pay 14%, pay your bills, and still almost double your money in housing every 3 or 4 years. So, you know, that's important in the context of, okay, where we are, how much you're paying, and will that type of inflation come into the market. What has happened is this, is that dirt's more expensive, lumber's more expensive, cement's more expensive. So there's definitely a correlation between what it costs to build versus what's there on the plot already versus what people are making. So it's going to be, it's a big number, though. What's happening out here today, I suspect, though, this is what's going on here in the marketplace. In the marketplace, what's going on is that the market's freaking because of this interest rate structure. So now the other side of that would be playing devil's advocate and said, okay, people have rode the market and say, okay, man, I'm getting out of there. I want a hard asset. So we'll see where people are going to start putting their money. I think you'll see a little more nervousness, you know, playing out the next, few months. What I don't see here, because the way this market likes to trade, though, this won't be a one-way route down. The volatility has already started, though, and I expect this volatility is going to be out there going right out into the spring. That's the way it seems to be set up right now. The real kick is going to be, like, look at this dollar. This dollar still couldn't hold price, you know? So it's like, okay, man, the dollar can't hold price. This still wants to go south, which is pretty amazing. Yeah, this thing couldn't hold its highs today. So metals, hard assets, this is where we might be going. You stay right there, folks. Come right back. Dow's down 588. NASDAQ's off 118. S&P's off 51.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 623. You get the NASDAQ off 126. S&P's down 56. Let's go take a look at some of those housing stocks. So we'll go to Toll Brothers first. Let's see. So Toll Brothers down 94 cents. Yeah, this is just a normal retracement. You know, Toll Brothers went from $36 5 months ago, goes up to $52, and you're trading into a couple high volume lows. So this gets interesting. You know what I love, and it's really sweet, being in the real estate business and being in the market simultaneously, because what did happen even in 2007, 2008, watching it, you could tell in 2005 it was going to fall apart. Took a couple more years than I expected, but bottom line, it was out there then. The way Toll Brothers, we'll pull up a few more, but the way this is trading, it's not there. In fact, I'll bring it back so you can kind of see what the difference was. The difference was pretty dramatic. You can see that the market didn't fall apart until 2007, but you can see Toll Brothers fell apart in 2005. You know, hit the highs, came off the high with volume, did a counter trend bounce by 2007, and then it was all over. If we go take a look at, let's take a look at a few more of them out here. So we'll take a look at Lennar. Lennar is down 254. Yeah, this is coming in Lennar's at 60.37. 57 is game on Lennar. We put this back on a weekly. Yeah, see, the last time with volume on the way up is 57 bucks. 57 looks game for Lennar. Bring this back on a monthly. And on a monthly, oh, this is cool. So check this out. We're not done here. Lennar has a high volume high at 72 bucks. And the 72 did take out the highs of 2005. So that is saying to me that, yeah, you got a hit here. But bottom line is that it's not the end of the world. Let's go take a look at the TLT. So the TLT is the 20-year plus ETF bond structure. This thing here, this is coming into the bottom of the consolidation. Now, this is going to need a lot more volume. This is intriguing. You know, you had volume last week, 237 million. This week, no, that's a monthly. That's a monthly, so I get this on a monthly. This has a long way to go before it even is a swing point, though. We're at 119. The first swing that we'll go after is 116. The larger swing is at 114. Take a look at, let's see, utilities. Let's see. AES, let's see what this is. I believe this is a utility. Yeah, generation plants. Okay, so AES, this is a regulated utility plant. Because what happens with interest rates, bottom line going up, folks, utilities get hit very quickly. Yeah, this has already been hit. This is actually pretty strong. We're at $11.15. It's been in the same place going all the way back since 2001. This is intriguing. This is actually pushing with volume on the way up. This one's higher price. So when we take a look at that, not the end of the world. And what we will get to is this. See, when you look at our interest rate structure, let me go look at the rest of the world here. So our 10 is at 2.8. Yeah, all rates went up right across the world today. These went up. France had just hit 1%, but you can see we're still 1.8% higher than France. That's pretty intense. Germany is at now almost approaching 0.8%. You get Spain, which is probably broke. They're at 1.4. We're double their rate. That's going to make a difference going forward. That's the bottom line. What we definitely have out here that we all can see, though, is that most times if you have a market that's getting hit, the money's going into bonds. What's happening here is that the bond market's getting hit. The stock market's freaking saying, are we going to go up in rates? So the rate's going to go up that fast? Because, of course, what ends up happening then is that equities will get hit. It's just that's just a fundamental deal. We get into let's go into that Bitcoin market for a second. Take a look at Bitcoin. So Bitcoin, take it on the chin in a big way. Bitcoin came down, filled the gap. The gap that Bitcoin had was 83.28. So we hit today 76.14. Real question is going to be, you're going to get a bounce. The way this is trading, you can get a bounce. The way this is trading, though, this looks like to me that this is going to do the big damage and, really get into this 4,600 area. 4,600 is the major place where we broke out from. If we take a look at a few of the other Bitcoins, this is what you have. You have Ripple is down 10%, Ethereum's off 11, Litecoin's down 11. What they've done, which is pretty cool, and they might save Bitcoin, is if we bring this back, what they have done is that they have come back to where they're broken out from. Like Litecoin right now, Ripple's at 85 cents. You can get your head wrapped around this at about from 45 cents to 24 cents. Let's go take a look at the silver market for one of our tigers. Okay, so silver. Silver's down 3.6%. We are at 1653. Vicious, vicious, vicious. Yep, let's take a look. Okay, you get volume, big time. So now you got to take, if I take that 73, that's a buck. That adds 1573, and you're at 1650. That means that this low can be game on the 12th. Let me put the SLV up for a second. See how the SLV is trading. So the SLV, let's break in a swing. That has volume behind the move. 1590. 80 cents. Yeah, this looks like, I'd say that both silver, the SLV, we need some help. This thing wants to go down to where we came off the bottom on the 13th. How are some of these? Let's go take a look at some of the stocks. Pan American Silver, down 43 cents. Yeah, that's not bad, though. Interesting, man. So you get that divergence. The metals itself, they're whacking the metals. You know, Pan American Silver doesn't look bad. Stay right there, folks. Come right back. Dow down to 634. NASDAQ off 129. S&P's down 57.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow right now trading down 668. That's 2.5%. You get the NASDAQ off down 137 or 1.8%. You get the S&Ps down 1.7%. This is the biggest hit in the marketplace, even percentage-wise, since September of 2016. Volume-wise, what you're going to have out here, too, is that you're going to have volume on the way down. And bottom line is that that's going to set up more than likely an A to B of an ABC structure on the way down. Oh, this is going to get interesting, actually. So check this out, man. This is intense. Well, we might not have. Well, we'll see. We only get 694 million right now, folks, on the NYSE. That's saying that we're only going to have maybe 900 million or a billion. That's crazy, man. You know what that is? Let me look at this inside the NASDAQ for a second, because if that's what we got, this thing will bounce right out of here. Okay, NASDAQ is a different animal. This is what we got with the NASDAQ. NASDAQ is down to 2.2 billion, so the NASDAQ is going to end up doing about 2.5 billion. That means the NASDAQ did come off the highs, has the volume on the way down, all of the above. Dow Industrial's a little bit different. If we go take a look at the S&P, the SPY, SPY also looks like we're going to get some big volume. Yeah, we are. We just did 36 million in an hour. We're at 136 million. They'll lay in another 50 million into the close. So you get the S&P trading back at January 11th. The elevator down is fast, furious, and all of the above. We take a look at the Qs. The Qs right now, that is down $3.20. And that baby also has 57 million shares. They'll throw another 50. No, they'll put another 20 into that close. If we go take a look at that tick index to see where we're shaking out, minus 1530 was the number thus far. No, you don't have a second one yet. Pretty wild. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Thanks for being there, folks. Have a great weekend, safe weekend. Go Patriots. Look forward to speaking right back here, Monday, 9 o'clock. Don't get them, folks.
Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.